Joining us now is Citi's head of investment banking, Tyler Dickson. Tyler, it's great to have you on the show.
Great to see you. Happy New Year.
We did start to see more deal making in the final months of 2023. Is your expectation that just sort of kicked the door open for more of it to happen in 2024? What are you expecting?
Look, I think we certainly like the way 2023 finished with equity markets at highs, with credit markets at lows, meaning rates and also spreads, creating some positive backdrop. We liked the second half of the year M&A activity. We certainly liked the way the year finished at about $3 trillion in value. It was very much a second half story, where about 9 of the 10 largest transactions were announced in the second half. So we think that has set up a foundation for the start of 2024 with a lot of that momentum carrying through.
The conversation I've had so many times in the past year, particularly the past 6 months, both on camera and off, has been that the divide between bid and ask was still too wide last year, and that the ask side was going to have to fall further to see more deals actually come to fruition. Has that happened?
I think we're getting there. I think 3 dynamics that we like is first, some more certainty around the interest rate outlook. Second, that buyers and sellers have had time in order to have their views of valuation coalesce. And third, I also think we're helped a bit by a little bit more clarity and a little less uncertainty around the regulatory environment. And so that's created opportunity, as you've mentioned, in places like healthcare, industrials, energy, and technology. And we see those opportunities continuing in 24.
Do you expect, Tyler, to see more take-private deals or public companies perhaps hunting other smaller public companies?
The CEOs and boards who we're talking to are, interested in all opportunities. So I think confidence is building. I think it's off a low base. So, it's difficult to predict the future. And I think it'll be evolutionary rather than revolutionary. When we look at activities, we think we'll see more of the same from last year with respect to corporates repositioning portfolios, selling off subsidiaries that aren't attractive or illuminating value through carve-outs. We think on the sponsor side, we will see some monetizations of their portfolios. Their limited partners want a return of capital, and we also think they have capital to invest. And so we will see some take privates and some new LBO activities. And of course, given that activists are in the market, and that's been a value creation strategy, we think that'll be a catalyst as well.
I think about Mark Benioff of Salesforce and Pat Gelsinger of Intel, because Benioff got in some trouble in 23 over the track record of his M&A and that working out. And Pat Gelsinger's been spinning off more and more things from Intel, trying to make this turnaround happen. Do you think investors are feeling okay about letting the Benioffs of the world, as if there's more than one, get back in and start buying stuff?
I think so. I think there'll be a balance of buying and selling activities. The strong will probably get stronger. The weak will get stronger by pairing off portfolios into the market that they don't think are consistent with their overall strategy.
You just mentioned LBOs. We know 2023 was a challenging year for leveraged buyouts. Credit tightened last year, particularly on the bank side. It raises the question, are deals going to be able to get financed this year? And how much of that hinges on a new normal being absorbed in terms of where rates end up?
Well, look, I think a bit of stability in the outlook for rates helps a bit, and that can create a foundation. I think the cost of money is obviously higher than the environment where we had interest rates low forever, but the absolute rates give us a foundation where we would expect activity to come forward. And so when we look at it, I think deal structures will be important, which is we think safe deal structures that'll work for the syndicated bank market and the big banks will have a place. We also think private credit and direct lenders will play a role in some other parts of the market.
How much do politics matter here? The Biden administration, particularly FTC, hasn't been too friendly toward deal making. But if it looks like things are swinging in a different direction in this election year, will that influence the eagerness to get deals done?
Look, I think deals will get done in either scenario. I think it's important that as 2023 unfolded, the regulatory outlook got a little bit more certain rather than less certain, and I think that helps at the margin. I think what I'd also point you to is generally we see constructive equity markets when we see the outrate for interest rates more likely to be cut than going higher, and in president election years where stock markets usually perform well. When we see that foundation, we certainly see the ingredients for some M&A activity to unfold.